Hello, everyone. This is Martin here again, and we are looking for trading opportunities for the coming week, which is April the 18th to the 22nd. And I'll tell you what, I'm also excited about the Caribbean heat and sunshine we're going to get this weekend. I mean, it's about time, right? I mean, here we are in Toronto, and it should be a lot warmer than it is, but this weekend it's going to be absolutely terrific. It's going to be 20 degrees Celsius or more. Today I was practicing outside. I was taking advantage of a lounger, so I was laying down in my Bermuda shorts and a t-shirt, just practicing, getting ready for the sunshine and the Caribbean heat that we're going to be experiencing this weekend. So having a lot of fun with the weather, and now we're going to have a lot of fun taking a look at the currency pairs. This week, basically, we're looking at here's a bit of a theme. Will the strong pairs continue their strength? And as we get going in this video, we will showcase, or I will showcase to you what the strong currency pairs were last week, which ones were the weakest, and again, we're gonna continue watching the stronger pairs, possibly getting stronger as well. And let's take a look with the very first pair. Okay, take a look at the Euro USD weekly. Okay, and um, this I'm just taking this off. You can see we the price has really gone sideways for a long time. I mean, take a look at the upper channel line here, resistance in with the gray rectangle. Here's a lower gray rectangle that I drew in, and this is indicating support. But you can see, look, just up, down, up, down. Here we had kind of a break to the downside. However, it came right back up again. It hung around here at the support. Now it's up again near the top of the resistance, down again, up again. And I kind of suspect that we're gonna keep going up and down sideways. For a while. So again, it's caution here. If you want to look for sell trading opportunities like counter trend, break from the resistance here. You can do that with a break below this black bearish candle. Now this is the weekly chart, and so we have a bearish engulfing candle off of resistance. So whether price will keep going down to at least the 50 moving average. There's a potential for a possible short-term counter trend trade. However, if we're also looking at a triangle pattern, you can see the upper trend line, lower trend line here. We did have a breakout here. However, prices come back down. So price may just go sideways and then go back up again. So really, it's up to you. It's an if and then situation. If price if you see some bullish evidence to the upside and price breaks here above this resistance, then certainly price is going to go higher to at least here, the 100 moving average, and then if it breaks this area, it will go higher to the 200. The MACD is above zero, but let's go down to the daily chart, and you can see there is a potential for a short-term buying opportunity. Folks, do you remember the swing pullback trade? Okay, so price has gone up, price has now come down, 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 down. We draw a trend line here, joining the highs here. Okay, and we're waiting for one good bullish candle, white candle, to close above this trend line, and then you would take a buy trade at the open of the next candle. So there's a potential for a buying opportunity if we have a close somewhere above 113.26, 113.30, then there's still room for about 80, 90, 100 pips. If it breaks this area, then it's going to go a lot higher. So on the daily chart, you can see price is kind of hovering between the 21 and the 50. So price, and I'm going to zoom in a bit. You can see there is a kind of a short-term support area right here. So price breaks this area, price will go down to at least to 50, and then you can look for possibly a evidence to the upside. And if that happens, let's just draw this trend line. So price may actually come down. Let's do this. Price may come down to here, and then price may bounce off to 50 and back all the way up to there. So that could be a buying opportunity here, or a break. You see right above here, above this white um, doji candle, just a break above there, and that would still be good for about 90-100 pips. Okay, so that's what I see on the Euro USD. And now we go to the British pound USD. This is the weekly chart. Again, you can see prices going sideways. So 1 week down, 1 week up, 1 week down, 1 week up. Again, let's drill down to the daily chart. Now you can see this very, very clearly here. We're in consolidating sideways within a triangle. However, price is being squeezed between the upper trend line, the lower trend line. So as price moves to the right side over here, the candlesticks are getting smaller, 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 and eventually, sooner or later, price is either going to break out to the upside. I just want to change the color of that. Okay, so we're going to change that to a dark blue, uh, showing direction. So if price breaks the trend line, price could be heading up, or a break to the downside below this um, support area that's indicated in with the gray rectangle. Price could go down to at least retest the previous swing low here. Okay, so right now it's an if and then situation. You kind of just have to wait for a break out of the triangle consolidation. I'm going to switch to the LEOD charts, the Louisiana day, and you can see the same thing here. So price is kind of hovering between the two yellow lines, the top 20 EMA, the lower 20 EMA. So you have to wait for breakout either to the upside or to the downside. Okay. Okay, now we're going to jump to the Australian USD. This is the weekly chart, and take a look here at the weekly candle situation. Last week we had a huge bullish engulfing candle, and you can see that we're in kind of a bullish uptrend channel. So I believe price is going to go higher. The Australian dollar last week proved to be the strongest currency, so just make a note of that. And will this currency pair keep going higher? And I believe it will be. So last week I said we were in an uptrend. Well, I'm going to go down to the daily chart. We were in an uptrend, and to wait for a breakout. And I said buy above 76.50. So let's take a look. 70 buy above 76.50, which is right about there. Okay, so if you would have bought about there, you would have made some pips, and that was good for about 71 pips. Let's take a look. Yeah, about 70, 75 pips. Okay, so if you would have bought there after the breakout above this candle right here, gotten in right there, you would have made some good pips. So that would have been a good trade. And you can see on the daily chart, I believe that price is going to go higher. The histo bars are rising, and should soon break the red trigger line here. Okay, so or this signal line, I should say. So I believe it's just going to go higher. And for this week, you can take a sell trade right now. Um, you can buy right now or wait for a pullback to the 76.80 to the 77 area, but like wait for a slight pullback or just take a buy trade right now with a very small stop loss just below this candle right here. Okay, and now we're going to take a look at the LEOD. Well, you can see the perfect entry was right here, 4 days ago. So again, remember, we always talk about the swing pullback or the simple swing strategy that you learned. Um, you can incorporate that with the LEOD, and how does that work? Okay, let's take a look. If we draw a trend line right there, okay, so I've drawn the trend line. Price did break here above with this candle, and you would have gotten in at the open of the next one, and you would have been in profit. Okay, the stop loss would have been just below the lower yellow line here. So, well, that's the LEOD, but that also proves the point. You can take a look at anytime price goes up high, swings back, breaks a trend line. That's a great opportunity. However, you could also have been a little bit more aggressive and take a look. As soon as you see this white candle, you see that one white candle right there with the wick. Let me just okay, there you go. See the wick right there? So place a buy stop, an aggressive buy stop order just above the high of that wick, right about there, and that would have given you an earlier entry for, let's say, how about 89 pips or so? Okay, so that would have given you a few more pips. This pair didn't move a lot, but it still was a winner, and showing that the Australian dollar was still fairly strong. The US dollar is still fairly weak. It's one of the weaker pairs right now, but Australian dollar certainly against some of the other cross pairs could prove to be a really good winner. So I'm going to now switch to the New Zealand daily, I should say weekly. Here we go. Last week I said we were going sideways, and um, in a way, that is, you know, it kind of went up last week. Let me just go down to the so we were here with the close of this Friday of the previous week. You can see with this red vertical line, it did go up, up, up for 2 days, 3 days, and then went down again. So. Um, there was an opportunity to get in here. And again, this is a swing. Price went up high. The previous week before that came all the way back down, and again, just waiting. Here's the pullback, the bounce off the support with this first white candle. Um, and if we were drawing a trend line, the second candle here on the Sunday Monday trading right here after the previous Friday close. This first big white bullish candle is the Sunday Monday trading activity, getting in right there at the open of the next one, the next candle right there. Okay, and that would have given you at least 77 pips, is as much as 99 pips. Okay, so I also believe in my PDF file that I sent out. I did mention for the New Zealand US dollar that you could buy above the 68.78 mark. Again, that's right about 68.78, right around there. Buying right above the high of that candle. That was in my notes that I had sent out to you. So pay attention to also the PDF file I sent out. That usually gives you more detailed information than just the video, and it's supposed to accompany the video as well because there's I can't record or state all the information I really want to on the video or even make the notes on the video. So that's why I'm now enclosing a separate PDF file to give you more of a heads up and some more detailed information to entries, sometimes stop losses. I'll state your stop losses and targets as well. Okay, so that's the New Zealand US on the daily chart here. And where do I see things going? Well, I believe we're still in an uptrend, but by the breakout. Okay, so the only trading opportunity really for this pair, you can see we're still in a sideways consolidation here. So what you want to do is wait for price to come up to this area and then wait for a breakout, and then there you go. You want to take a buy trade to the upside. Okay, so that's the New Zealand the KISS chart, and here you can see we've on the LEOD chart price, again, the entry, a previous entry, just again, really quickly to show you, drawing a trend line. There you go. Okay, so you see here we have a peak. Okay, here we have another peak, like an up and down trend line, price uh, went up, came back down. So this basically is a swing pullback play, simple swing pullback, a break of the trend line, getting in right there at the open of the next candle, and that would have made you some pips, giving you a profit as well. So, again, looking at the LEOD for pure breakout trades, which is this candle right here, as well as incorporating what we've learned on the simple swing strategy that was presented to you in course number 1. Okay, so the first course that you learned. Now we get to the US CAD weekly, and what do we see here? Okay, so here's the weekly chart, and again, you can see on the weekly, this is another huge bearish candles closing just slightly below the support area in the gray rectangle. So again, anytime price comes to support, you want to kind of just wait and see. Will price continue going down? And if it does, and you want to play a trade, you want to take a sell trade, then you want to take a sell trade on the break of the lower wick or shadow right here, the break of that. Let's go to the daily chart. You can see here. Okay, so on the daily chart, price did go down, and I did mention last week that you're to wait for a breakout and sell below. Let me just see. Yeah, you can sell below 129.48. Okay, 129.48, and let's take a look, see where that was. 129.48. Okay, so that's right there. Okay, I can mark it in right there. So right there with that candle there, you would have made a lot of pips. I think this was probably one of the biggest winners last week. So that was good for 200 and almost 220 pips. Okay. If you would have taken the sell on that one right there. And for this week, I kind of see the same thing. I'm going to zoom in the chart a bit. You see this right here? This is a bearish engulfing candle. This is the daily chart of the US CAD. And I believe if you want, you can. It hasn't broken the trend line. I've drawn in the trend line here. So we're looking at a shorting opportunity, a pullback here to the resistance. This is formally here support. Price came down here, went up, so this is support. Here's support, but now price is broken down. It's now retesting previous support, now new resistance. Remember, previous support becomes new resistance once price stays below this area. And if you want to take a breakout sell trade just below the wick of that candle, so somewhere just right around there, take a sell trade, and it's going to go to at least to retest the previous low here. But if it breaks this area, we've got a long way to go, folks. And if it breaks this area here, this pair, the US CAD, could go down all the way for another 700 pips. So this could be a huge monster move if it breaks this area right here. Okay, so just keep that in mind. Okay, and or you can be really conservative and play the breakout of the previous swing low here. Okay, so I'm just going to um, do that, and now we're going to take a look at the US CAD LEOD. Okay, again, you can see this one has just been going down, 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 down all the way since this date here, early January, or I should say, since January 19th of this year, and already it's moved down 1,782 pips. So you can see certainly over the long term that the US CAD has really been weak against the Canadian dollar. Canadian dollar really riding on the strength and the coattails of the increasing strength of the oil. So this is what I see here, and there's no reason to basically uh, um, y- say that this trend is going to end. I mean, the trend here, it's a long-term downtrend. It's intact until you see major evidence to the upside, and that major evidence, it's really, I'm going to draw that major evidence here. So I'm going to draw in a shape. I mean, price literally would have to get above this area right here Price would have to get above here, okay, and continue going higher before we can say that we are in a bullish market, okay, where price is actually retracing and price is actually reversing, okay? So, but right now, there's no reason in the world to kind of discount that, and I believe price is just going to keep going down. Okay, so again, we've got a little bit of a pullback. Just wait for a break of this last candle here, the low of that wick, and price should keep going down. Okay, so that is what I see for this one. And finally, we get to the U.S. Swiss franc. Let's take a look. Take a look. Before we do that, here is the weekly oil. You can see basically oil. We are in an uptrend channel. Okay, but I want to come down now to the daily chart. This is the 200. This red dash line is the 200 SMA. You can see price is broken above that. So the 200 SMA is one of the strongest dynamic levels of support or resistance. In this case, price is broken above the 200. So now this is acting as a support. Price is now coming back down a wee bit on the daily chart. It's testing the 200, but that should hold. And if it holds, price will bounce back up and then possibly break the high of the previous swing high. So I can pretty well see that price could come down just a wee bit, and then price could go basically all the way higher and at least retest the top of this. You can see this trend line that I've drawn in right there. So that, once price breaks the previous high here, this is going to go up quite a ways. And if it does that, then that's the reason and the supporting evidence to show that the U.S. CAD will be going down in price. Okay, will be going down lower on the charts. So that's the oil, and now we get to the finally to the U.S. Swiss franc. Okay, last week I mentioned that I was looking at selling opportunity. However, and I did mention that we are downtrend trend continuation, which we basically are. As you can see, we're making lower lows here, lower highs here. So prices up, down, up a little bit higher, making a new lower high, down, making a new lower low to the previous swing low. So we are in a bearish channel. However, we had a major pullback last week. You can see it was this huge bullish candle. So again, it's kind of reached on the weekly chart anyways. You can see this gray rectangle that is resistance. Let me go down to the okay, so you can see that more clearly on the daily chart. I've zoomed in. So again, we are in a zone right here, which is resistance, and you can play this two ways. One, you don't have to do anything, However, if you can play a break to the upside, if you want to place a buy stop order above the high of these two wicks right here, so somewhere here, now you may have a good counter trend trade up to the next resistance area right here. It may go up to here or even a little bit higher before coming back down again, right? Or taking a sell trade with respect to the major downtrend here, because I overall we are in a downtrend. So what you can do is take a sell stop order below this area right here. Okay, so somewhere 95, 87, something like that. And if price gets to there and fills your order, you're still going to make 85, 90 pips. So both ways are short-term moves, short-term to the downside to retest the previous swing low, short-term to the upside, counter trend trade move, again for about the same type of pips. And right now the MACD is above zero, but you can see the histo bars are getting smaller, rising toward the zero level. So the short-term trend bias is to the upside, and then again, once price gets to here, you could wait for a selling opportunity to the downside. Okay, so again, this is a wait and see situation, and I'm going to switch really quickly to the LEOD chart, you can see the same thing, very clear. Prices basically in between, in no man's land between the upper yellow line, the bottom yellow line. So really, you want to wait for a breakout to the upside. But again, the upside here we've got resistance, break to the downside again. We've got the previous swing low as support. So short-term moves either way, to the upside, to the downside. Right now, the bias is to the upside. Okay. Last week, if you did take a trade upon my selling recommendation, that would have been a loss, one of the few last week, in a rather pretty good week. And our final pair, the US Japanese, you can see downtrend. We had a huge breakout on the weekly chart. Okay, this is a huge weekly candle, big move, and now we're in a slight bit of a retracement. I believe we're in a downtrend here. Price is going to keep going down to at least retest this major. Take a look to the left here. This major support area of 105.100, 105.10, somewhere around there, and also meeting with the 200. The 200 moving average with this red dashed line is coming up. So this is an area of confluence, and I believe price eventually will come back down. It may retrace a bit more, but again, I'm taking a look. Remember this simple swing strategy? Okay, here's the daily chart, and take a look. I'm going to zoom in. This is really important, guys. Okay, you can see on the Friday close, this was Friday's trading. Last Friday, it closed with a bearish engulfing candle and also broke the trend line. I'm going to go down to a 4-hour chart, okay? You can see this very clearly on the 4-hour chart. So here it is, using multiple charts to look for entries. We already had broken on the 4-hour chart the trend line I had drawn in. Also, price is now below the 50 moving average in the blue here. You can wait for a slight pullback up to about here if you want, because right now the last 4-hour candle was an up candle. So again, you can wait for a slight pullback and then look for to take a sell trade to the downside, or just take a sell stop order, place a sell stop order just below the low of that wick right there, and you're going to retest at least the previous swing lows. So and once price breaks this previous swing low, it's going to go down much further. So that is what I see with this chart here. That is the U.S. Japanese, and now I'm going to go to the. You can see here, price went back up on the LEOD. Great bearish engulfing candle. So basically, you can take a sell trade right now, or wait for a slight pullback, or take a sell stop or just below the low of that candle right there. Okay, and you can see we are bearish here sentiment. The blue line just went up with the retracement, but it once price comes down further, this blue line will be below the yellow line right here. So last week, again, just a quick summary. Last week was pretty good. There was an opportunity to make at least 350 pips or more, and there's a lot more pips for this coming week. I just want to look at some cross-currency pairs again based on strength and weakness. And lately and last week, we've seen that the Australian dollar was very strong. The Canadian dollar seems to be fairly strong as long as the price of oil keeps going higher. And the weak currencies were the British pound, the euro is kind of on the weak side as well. And you can see the first currency pair I want to look at is the British pound, Australian dollar. You can see it's been going down quite a ways. British pound against the Australian dollar just seems to be going down, down, down. And the next major area of support is this dynamic moving average. This is the 200 SMA, okay, right here. So I believe price is going to come down, and you've got still room for at least another, wow, look at that, guys, 380 pips or more. But again, watch, if you go down to the daily chart, you can see everything seems to be bearish, but we may have a slight pullback, or you want to take a breakout below the low wick on this black bearish candle here. So this is the British pound Australian dollar, and the next one, let's take a look, is the British pound New Zealand. So same thing. We're in a large bearish channel with this magenta trend line, another trend line here. So price right now is below the 8 moving average, below the 21 and below the 50. And all these averages are below the 100 and the 200. So it looks like price is going to keep going down to at least retest the low of this channel. But remember, we are at, just take a quick look. I'm going to draw in a rectangle. So we are, well, it looks like we've pretty well broken the support here. So, there may be a slight retest. Price may go up a little bit higher, but basically I see sell trade. So take a sell trade to the downside just below the wicks of these candles. And that's the weekly chart, or this, and this is the daily right here. I should say that's the daily. And another one is the Australian, Japanese yen. This is interesting. You can see price is kind of going sideways, but the MACD histobars are rising toward the zero. And I'm going to drill down to the daily. So you can take a see the histobars here. So uh, I believe price could go higher, and you may want to park a buy stop order just above this area right here. And if you do, the price is going to come up and meet with this area right here. If price breaks the previous high here, it's got a long way to go. So this certainly could be good overall for a 450 pip move. And finally, the Canadian Japanese pair. You can see here again, the histobars are rising towards zero. You can possibly park a buy stop order above this area right here. And if price goes higher, you've got at least 120 pips. And if it breaks the previous swing high here, price would, there's room for a lot of profit all the way up for about 297, 300 pips to meet up with this 200 SMA. So these are some of the cross pairs I'm also looking at. Again, I don't advocate taking any trades right now on those cross pairs, but again, waiting for certain situations to happen, anticipating where price is going to go, and then being ready with either pending buy stop orders or or taking market orders once price reaches a certain area. But again, you have to anticipate where price goes, be ready, and take advantage of opportunities that come your way. So that's all I've got for you for this week. Take care, and uh, if you do have any questions, feel free to send them in to me, especially for some of the new students. I'm more than happy to look after you, and I do certainly want to help you trade. So take care, happy trading, and enjoy the wonderful sunshine this weekend. Don't get too sunburned. Uh, I'm wishful thinking. Obviously, it's not going to be that hot, but still, it's better than what we've had. So take care, enjoy the weekend, and we'll talk to you again soon. Bye for now.